Hello, and welcome to Pro Trader Strategies Market Commentary for Thursday, December the 10th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. All right, having that out of the way, let's get this on. Not a whole lot of economic data coming out today. We did have importer prices come in a little bit lower than expected, and natural gas storages came in lower than expected. Unemployment claims did come in much higher than expected. So that hasn't put any damper on the overall market really since that data has come out. As you can see here, we have the NASDAQ still in positive territory, above up about 19 points or so, and really trying to figure out which way it wants to go, but it's stuck in a basically a support resistance of right here at around 45.85 to 47.30 ish. All right, so we'll have to break out through that. This value area high is really acting as a support. I'd like to see it come down here and go to the value area if nothing else. But that's not happening. As you can tell here, the value area low of the last several days on the E-mini S&P chart here has acted as support several times and as resistance when we came back up against it yesterday and tried to bump up against it. But today it's acting as a nice support. The bulls are really defending that area. We'll have to see what happens later on today. So anyway, a couple of things. I talked about this oil, the crude oil inventory is coming in a lot lower than expected, and there was a big drawdown, just like in natural gas, a drawdown today. So I'm pretty bullish on the overall oil right now. I think it may have found a little bit of a bottom here. And I looked at OIH because it's the oil and gas services sector. It's not the XOP, which is oil exploration. I don't think that oil is high enough to really start ramping up exploration for oil here around the United States. It's just not going to be profitable enough for those guys to really start ramping that up. That will start picking up if we get up into the 50s and 60s, I think. So that's going to be a little bit behind this curve. So with OIH, I was looking at it a little bit bullishly. So I did the January, sold the 26 put spread, sold the 28 puts, I should say, and bought the 26 puts, and collected a credit of 65 cents for that trade. So I'm looking for oil to at least get a bit of a pop and rally a little bit off those lower than expected inventories from yesterday. As you can see, it has started to rally a little bit. Qualcomm, it's just been beat up. It just looks like, it's a beaten up stock, but, it had a high IV. I needed to add on a little bit of long deltas because my overall portfolio is net short deltas, so I wanted to add some long deltas. If I'm net short, it means I'm short the overall market. This one hasn't caught up with any of these pops in the market that it's seen, so I needed to look at something to add some long deltas to neutralize my overall portfolio a little bit. So in Qualcomm, I did the January, sold the 48.47 in the put spreads, and collected 33 cents for that. So I sold the 48 puts, bought the 47 puts, and collected a credit for that. So I figured if it goes below this area here, the 48s, which I'm really close to, I want to be out if it makes a new low at 47. So that's why I picked those strikes there. And, I was able to collect a third the width of my strikes. So that meets with my rules, and it has high implied volatility. For some reason, I have OIH up here again, but let's look at Adobe. Adobe, I made the mistake on Monday putting this trade on, and nobody called me out on it because it has earnings today, believe it or not. So I did catch this downdraft, so that was sometimes better to be lucky than good. And I had picked these strikes because it looked like, if I could get in somewhere around this 92.5 area, I wanted to be out if it made new highs. And so I had sold the January 92.5, 95 call spread in there, and originally sold it for 83 cents, I think it was, and bought it back for 77 cents this morning. One thing with Adobe, even though it is at these highs, and I wanted to see this as a big resistance area and add the nice high implied volatility. Well, that implied volatility is coming from the earnings that are coming out today. And historically, if we look at this on a weekly chart for Adobe, they beat earnings almost every single time in the last several years. So I didn't want to mess around with being short this, with it being beat up. I didn't want to be shorted if they beat earnings and really pop to new highs. I'm just way too close. It's also right there inside the market maker move, which is around $5.55. So that would put me in the money on those. So I covered that trade just to get out, but I am going to be looking at this as an earnings play today. So since the market maker move is about $5, I'm going to go about doubling that, and I'm going to be looking at selling the 80 puts and just collect some premium for that. I probably should be able to get a little over 40 cents for those, and that's right in line with all of my rules that I talk about in these webinars that we did on earnings trades. If you want to find out a little bit more about that, I don't have the time to go into all the details on that right now, but this is an earnings trade I'm going to be looking at and selling those 80 puts. I don't think I'm going to be trying to cap the upside on that. Pandora, I just got hit on this right before went online here and to do this video. In January, I sold the 12 puts, bought the 11 puts, and collected 44 cents for that. Pretty nervous about this trade. I sold the 12 puts because I'm hoping it'll stay above this. I'm looking at this as an opportunity for somebody. It's gotten really wanky, so there just seems to be something in the air with this, that there may be some kind of buyout or merger going on, merger talks going on. I don't know. It's a conspiracy theory, I guess, at best, but it has gotten above this 8-day moving average, and was hoping that, because it's settled above there, it was going to be a bullish signal there. So we'll have to see about that. I don't know. One time in the pits, a guy told me that the trade that makes you the most nervous is the one that'll make you the most money. Well, I don't know about that, if that's always true, but this one's making me a little bit nervous now, especially with this candle, the way it's kind of shaping up. So, and back to Adobe, like I said, it has beat earnings several times, and so, like I said, going along with those rules, I'm going to be looking at these maybe 97.5 calls, but most likely going to be selling these 80 puts here. So it's right there in line with my deltas and everything else that I talk about in those webinars. So if you want to find out more about that, you can go to protraderstrategies.com and get those earnings play webinars sent to you. Also this Friday, we're going to be doing one on using puts in lieu of stop orders. So that should be a really good one. And it's going to be a several part series. First one's going to be on puts, and then we're going to be doing some other strategies wrapped around that. That could be, a higher probability of profit. And then on Monday, I'm going to be with the timingresearch.com doing a round table, and we're going to be discussing everything from our favorite trades to what the Fed might do. And as you can see right here is the market maker move for Adobe. That's all I got for you guys today, other than if you can't take that, take it easy.